DAI stands out as a unique and significant cryptocurrency in the ever-evolving digital asset landscape. It's a stablecoin, distinctively designed to maintain a stable value closely pegged to the US dollar, USD. This feature sets it apart from other cryptocurrencies, which are typically subject to substantial value fluctuations, and makes DAI particularly suitable for daily transactions and practical uses. At the core of DAI's stability is a hybrid mechanism that combines algorithmic management with collateralization. Users contribute other cryptocurrencies, like Ethereum, as collateral through smart contracts within the Maker protocol, a decentralized lending platform. This approach of collateralized debt positions, coupled with sophisticated algorithms, ensures the maintenance of DAI's dollar peg. The Maker protocol autonomously adjusts DAI's supply and demand, incorporating mechanisms such as stability fees and liquidation auctions to preserve the requisite collateralization. DAI's decentralized nature, assured by MakerDAO, a decentralized autonomous organization, enhances its appeal. Its transparency, guaranteed through the public accessibility of transactions and smart contract codes on the Ethereum blockchain, builds trust in the system. Moreover, DAI's stability and versatility make it a valuable tool in various financial activities, including lending, borrowing, trading, and as a medium of exchange in the broader DeFi, decentralized finance, ecosystem. However, it's crucial to recognize that DAI's peg to the USD isn't perfectly fixed and can experience minor fluctuations due to market dynamics and algorithmic adjustments. Its stability also heavily relies on the adequacy of collateral within the Maker protocol, a factor that could be a concern if the collateral's value declines significantly. Despite these considerations, DAI's innovative approach and growing integration in blockchain applications render it a key player in the cryptocurrency world, providing a stable and reliable alternative amidst the typically volatile digital assets. In conclusion, DAI emerges as an innovative and significant cryptocurrency in the dynamic digital asset landscape, primarily distinguished by its stablecoin nature that aims to maintain a stable value pegged to the US dollar. This stability, derived from a hybrid mechanism of algorithmic management and collateralization, sets DAI apart from other volatile cryptocurrencies, making it a practical option for daily transactions and broader financial activities within the DeFi ecosystem. Its decentralized governance through MakerDAO and the transparency afforded by the Ethereum blockchain further enhance its credibility and appeal. However, it's vital to acknowledge the inherent challenges and vulnerabilities of DAI, including its dependency on the collateral's value and minor fluctuations in its USD peg due to market dynamics and algorithmic adjustments. Despite these concerns, DAI's role as a stable and reliable option in the volatile world of digital assets solidifies its position as a key player and a valuable tool in the evolving cryptocurrency domain. DAI is a fascinating cryptocurrency that occupies a unique niche in the digital asset landscape. Here's a breakdown of its key features. Type: stablecoin. DAI is designed to maintain a stable value pegged to the US dollar, USD. Unlike other cryptocurrencies whose value fluctuates significantly, DAI aims to offer price stability, making it more suitable for everyday use and transactions. Mechanism: algorithmic and collateralized. DAI achieves its stability through a combination of algorithms and collateralized debt positions, CDPs. Users deposit other cryptocurrencies, such as Ethereum, into smart contracts on the Maker protocol, a decentralized lending platform. This locked cryptocurrency acts as collateral for issuing DAI. Algorithms within the Maker protocol automatically adjust the supply and demand of DAI to maintain its peg to the USD. This involves mechanisms like stability fees and liquidation auctions to ensure sufficient collateralization and prevent the peg from breaking. Key features: decentralized, DAI is not controlled by any central authority or individual. Its stability and governance are managed by MakerDAO, a decentralized autonomous organization, DAO, owned by the holders of its governance token, MKR. Transparency: all transactions and smart contract code are publicly accessible on the Ethereum blockchain, ensuring transparency and trust in the system. Utility: DAI can be used for various purposes, including borrowing, lending, trading, making payments, and participating in DeFi applications. Its stable price makes it a reliable medium of exchange within the cryptocurrency ecosystem. Things to consider: while DAI maintains a close peg to the USD, it's essential to remember that it's not a perfect 1:1 ratio. The price can deviate slightly due to market fluctuations and algorithmic adjustments. DAI's stability relies on sufficient collateralization within the Maker protocol. If the collateral value falls below a certain threshold, DAI could lose its peg. Overall, DAI presents a unique and innovative approach to cryptocurrency stability, offering users a reliable alternative to volatile digital assets. Its integration with DeFi applications and growing adoption within the blockchain ecosystem make it a significant player in the evolving cryptocurrency landscape. DAI's operation relies on a fascinating interplay of smart contracts, collateralization, and algorithms, all orchestrated on the Ethereum blockchain. Here's a breakdown of the key steps. Depositing collateral. Users lock supported cryptocurrencies like Ethereum, ETH, into smart contracts on the Maker protocol. These smart contracts are called Collateralized Debt Positions, CDPs. The value of the deposited collateral serves as the backing for the DAI to be minted. The system maintains a minimum collateralization ratio, currently around 150%, meaning the value of the collateral must be at least 1.5 times the amount of DAI minted. Minting DAI. Once enough collateral is deposited, users can mint DAI, essentially borrowing against the value of their locked assets. The DAI is generated through a system called stability fees and stability pools. These mechanisms adjust the supply and demand of DAI based on market conditions, ensuring its peg to the USD remains stable. Maintaining the peg. The Maker protocol employs various mechanisms to maintain DAI's price stability. Stability fees. Users pay a small fee when minting or holding DAI. These fees are used to buy and burn DAI, adjusting its supply and demand to keep the price close to the USD peg. Liquidation auctions. If the value of a user's collateral falls below the minimum ratio, their CDP is liquidated. The collateral is sold off to buy and burn DAI, preventing it from losing its peg. Oracle Network. The system relies on a decentralized Oracle network to feed real-time USD price data to the smart contracts. This data helps the algorithms adjust supply and demand accurately. Repaying and releasing collateral. Users can repay their DAI at any time to reclaim their deposited collateral. The repaid DAI is burned, reducing its total supply and maintaining the peg. Governance. The Maker protocol is governed by MakerDAO, a decentralized autonomous organization, DAO, owned by the holders of its governance token, MKR. MKR holders can vote on proposals to change the protocol's parameters, adjust stability fees, and introduce new features. This is a simplified overview, and the actual process involves intricate mathematical algorithms and complex smart contract interactions. However, hopefully, it provides a basic understanding of how DAI's unique mechanism works to maintain its price stability and facilitate various use cases within the DeFi ecosystem. While DAI itself is a decentralized project with no single individual or entity solely responsible for its creation and ongoing development, there are several key players who have played important roles in its journey. Rune Christensen. Christensen is widely considered the father of DAI and the founder of the Maker Foundation, the organization that initially developed the Maker protocol. He played a crucial role in conceptualizing, designing, and launching DAI in 2017. Christensen remains an influential figure in the MakerDAO community and continues to offer guidance and insights on the project's future direction. MakerDAO Core Team. A dedicated team of developers, engineers, and security experts work full-time on maintaining and improving the Maker protocol. They are responsible for implementing upgrades, fixing bugs, and ensuring the smooth operation of the system. While individual team members may change over time, their collective efforts are vital to DAI's ongoing success. MKR Token Holders. The holders of MKR, the governance token of MakerDAO, play a crucial role in shaping the future of DAI. They have the power to vote on proposals that affect the protocol's parameters, fee structures, and overall direction. This decentralized governance model ensures that the project remains community-driven and responsive to the needs of its users. The broader Ethereum community. DAI's success is also heavily reliant on the broader Ethereum ecosystem. Developers of other DeFi applications, Oracle networks, and wallet services contribute to the overall functionality and usability of DAI. The active and engaged Ethereum community provides valuable feedback and support, fostering the project's growth and development. Therefore, attributing DAI's creation and ongoing evolution to any single individual or entity wouldn't do justice to its decentralized nature. It's the collective effort of a dedicated team, engaged token holders, and a supportive community that has propelled DAI to its current position as a leading stablecoin in the DeFi space. Over the past year, the stablecoin DAI has experienced several noteworthy developments and events. Market value surge. DAI's market value surpassed $5 billion, a significant milestone. This increase was attributed to crypto investors capitalizing on high interest rates, some as high as 8%. This surge came after a period of decline. Depreciation in value. DAI faced a depegging event, where its value dropped to all-time lows of 88 cents. This devaluation was a consequence of the collapse of Silicon Valley Bank and Silvergate Bank, which had a broader impact on the crypto market. As an algorithmic stablecoin collateralized by holdings from MakerDAO, including USDC, DAI's value fluctuated in response to the market's instability. Rebranding discussion. Rune Christensen, the founder of MakerDAO, proposed a rebranding of the DAI stablecoin. He suggested that the name should include USD to make it more appealing and understandable to the general public. This proposal came amid a broader discussion about the endgame decentralization plan for MakerDAO. The rebranding is aimed at making DAI and MakerDAO more accessible and to foster growth. Impact of banking collapse. The shutdown of Silicon Valley Bank, SVB, significantly affected the stablecoin market, including DAI. Following the bank's failure, there was a notable increase in the burning of USDC and the minting of DAI. This shift was a reaction to the banking crisis, as crypto users sought stability. The event led to a 10% drop in USDC's market capitalization and a nearly 29% increase in DAI's market cap. DAI's correlation with USDC. The value of DAI closely followed that of USDC because, at the time, USDC holdings and related instruments represented a significant portion of the collateral reserves backing DAI. Both DAI and USDC depegged following the SVB collapse but recovered to their peg levels after the Federal Reserve's intervention. In response to these events, the composition of the reserves for both stablecoins was adjusted, with DAI diversifying away from USDC across multiple stablecoins and increasing the share of real-world assets. These developments highlight DAI's position in the volatile stablecoin market and its interconnection with broader financial and crypto market dynamics. The efforts towards rebranding and diversifying collateral reserves indicate a strategic response to ensure stability and growth amidst market fluctuations. Refuting the points made about DAI requires a critical analysis, focusing on the potential weaknesses or oversights in the described aspects of DAI. Here's a breakdown. Stability claim. While DAI aims to maintain a stable value pegged to the USD, it's important to note that this stability is not absolute. Market conditions and fluctuations in the value of collateral can lead to deviations from the peg. This inherent instability, even if minimal, challenges the notion of DAI being a perfect stablecoin. Collateralization and algorithms. The combination of algorithms and collateralized debt positions, CDPs, is complex and not fail-proof. There's a risk associated with the volatility of the collateral, like Ethereum, which can affect DAI's stability. Also, the reliance on algorithms for stability can lead to unforeseen complications, especially in extreme market conditions. Decentralization and governance. While DAI's decentralized nature is emphasized, the actual governance and decision-making process may not be entirely democratic or transparent. The influence of major MKR token holders could potentially skew decisions in their favor, rather than reflecting the community's interests as a whole. Transparency. Although the transactions and smart contracts are publicly accessible, the complexity of these contracts and the technology involved can be a barrier for average users to fully understand and trust the system. Utility. DAI's utility in various applications is commendable, but its widespread adoption is still limited when compared to more traditional forms of currency. This limitation affects its practicality as a medium of exchange outside the cryptocurrency ecosystem. Dependence on collateralization. The stability of DAI is heavily reliant on the collateral value. In scenarios where the crypto market experiences a significant downturn, the collateral value could plummet, risking DAI's peg to the USD. Maintenance of the peg. the methods used to maintain the peg, like stability fees and liquidation auctions, introduce additional complexities and risks. There's also a dependency on accurate data from decentralized oracles, which could be a point of vulnerability. Governance and influence. The governance by MakerDAO, while innovative, may not be fully immune to centralization pressures, especially given the influence of a few key figures or entities, such as Rune Christensen and significant MKR token holders. Market value and stability. The recent developments, including the market value surge and the depreciation in value, highlight the susceptibility of DAI to external economic events, like the banking collapse. This undermines the notion of DAI being a completely stable asset. Correlation with USDC. DAI's correlation with USDC and its impact during the banking collapse indicates that DAI is not entirely insulated from the traditional financial system and its fluctuations. These refutations point to the complexities and challenges within DAI's system, suggesting that while it is an innovative and significant player in the cryptocurrency landscape, it is not without its vulnerabilities and limitations.